You guys, hope you are doing good. Welcome to the new video. So in this video I will show you about how the banks will deliver the orders from one place to another place by taking out the retail people liquidity. If you see here, the retail people taken out. Retail people have buy stops here. Buy stops successfully executed and the market reversed. Same thing here. But in this case the SMC people got trapped out here. It is the SMC clear order block. It was taken out by the banks intentionally and the market reversed. This cycle happens over and over and over and again. This is called AMD cycle. AMD cycle means the banks need liquidity in order to move the price, so they will go under the accumulation. Accumulation is nothing but range. So what they will do, what the retail people will do in the ranges is they will buy from the top of the range here and they will sell from the low of the range. They will trade like this. So the market makers know how the retail people and every player in the market trades. So they will take the liquidity and then move in the real direction, and then they will take the liquidity of the high and then they will move. This is how the market maker take both sides of the liquidity and then move the price. If you see here, the market maker took the upside of the range first and then the downside, then it continued in the real direction. This is how the market moves from one phase of the AMD cycle to another phase of the AMD cycle. The first phase is accumulation of the orders. The second phase is manipulation of the orders. The third phase is distribution. These are the total three phases in the markets. So here, if you observe cleanly for each liquidity grab, there is a type of certain behavior that market will execute. The market and the algorithm will leave some footprints and we can know whether this is the liquidity grab or the break of the structure. If you see here, the candle behavior, speed and aggression candles, these are what I call it as speed and aggression, which have imbalance. If you see, there is a huge imbalance from this candle to this candle. There are 1, 2, 3, 4 consecutive bullish candles. What it indicates? Huge buy orders. There's nothing, no retail people here. No retail people are selling here. Only buy. Why it happened? It happened by algorithm, because when the retail people are involving in the marketplace, the price action would be like this. Price action would be like this. But in this case, it is completely algorithmic driven. There is no sellers offered in this place. This is completely algorithm trying to buy and take the liquidity of the one side, and so automatically it will deliver the sell orders, so then all the buy orders will be in sells. So that's why same thing happened here. If you observe the liquidity graph here, SMC block liquidity graph here, same thing, huge bearish candles, 1, 2, 3, 4, 5, 6, 7 bearish candles. Why? Simply because it's an algorithm delivering the price. Simple thing, over and over and again. If you see again in the major time frame, this is the liquidity buildup in the higher time frame. Same thing happening here. The liquidity taken out with speed and aggression candles, and then the market will reverse. I will target this liquidity. There is lot of trendline liquidity also sitting out there here. This is how the market will manipulate the traders and they will move in the real direction. If you cleanly observe the speed and aggressions in the candles, taking out the liquidity, that's the footprint. That's the simple footprint of the charts. Speed and aggression, taking out the liquidities. That's the clues the algorithm will leave to us. Nobody teaches this stuff. You should work on it. Even in any time frame, this stuff will happen. Any time frame, this stuff will happen. If you see in the higher time frame, this is the liquidity graph, but in the lower time frame, if you see the same stuff, liquidity, can you see the candles power? 1, 2, 3, 4, 5. This indicates this is not the retail people driven market. This is the algorithmic driven market. Liquidity got taken out, the market reversed. We can be in this clean buy position if we want and target the next liquidities. This is how we can follow the footsteps of the algorithm. Simple trading. In the intraday, if you see, this is the liquidity grab again. Speed and aggression candles taking out the liquidity. This is what I mean it as the moves. Simple. Just following the algorithm, it means just following the algorithm. If you see here, this move, speed and aggression, taking out which liquidity? Intraday liquidities, right? Taking out the liquidity and mitigating the order block with imbalance. Everything is there. Liquidity got taken out with speed and aggression. Always the speed and aggression indicates the banks are involved in this move. Banks are intentionally taking the liquidity. So just we should go with the banks. That's it. We are going with the top level players of the food chain. Top level players of the food chain. This is how we trade the market from liquidity point to the liquidity point. Not every break of the structure is a liquidity grab. We should understand the break of the structure, whether it's a break of the structure or liquidity grab, by understanding the footprints of the algorithm. The algorithm will leave the simple footprint like this: speed and aggression. If there is speed and aggression in the charts, it indicates there is a huge volatile move is coming. Is going to come. Huge volatile move is going to come. See, every time frame in this 15-minute time frame, 1, 2, 3, 4, 5. 5 only black candles taken liquidity, market reverse. Same thing here, 1, 2, 3, 4, 5 bullish candles, market reverse. Same thing here. See the volume, there are no bullish pressure in this, only sell. Took the liquidity, market reverse. Now in the higher time frame context, this is the liquidity grab. We should see the market reverse in the coming months or weeks because it's higher time frame, right? At any given time frame, if you see, the market works on the liquidity grabs. Any time frame, this is October. If you see, speedy candle, always the speed candles are the liquidity grabs. Always the speedish candles are the liquidity grabs. If you go on to the 15 minutes even, there are a lot of stuff I can show here. See here, speed candle, 1, 2, 3 candles, liquidity grab. Many moves are there like this. Same thing happens over and over again market. If you see here, liquidity grab, can you see the speed reversal because of the liquidity grab? Again, liquidity grab, short reversal. There is no liquidity grab here. This is the break of the structure. That's why the market continued the uptrend. Simple things happen over and over again markets. We should understand. See here, again the clean liquidity grab. 3 candles, the market got reversed. 1, 2, 3, 4, 5, the market got reversed. Again, 1, 2, 3, 4, 5, market got reversed. Again, here if you see, at the time of the liquidity grabs, the volume, they can't lie the volume, right? If you see here, it is the perfect example I can show. 9th September, market took the, see the bullish candle pressure here. There is no VIX itself, no VIX, 1, 2, 3, only bullish pressure. It indicates the algorithm is there, algorithm is behind the moves. We took the sell here. Everything is algorithmic in the price. I have decoded so much of it. That's why I am teaching you this concept. You will be in the top of the food chain if you use my concepts over and over again. If you want to learn more about this deep dive concepts, because we have a separate community that is working every day to crack the market algorithm. And the result is this: we are taking these type of trades. This is just a little insight, little work I am showing you to this YouTube, guys. If you want to join the private group, I will leave the link in the comment section. You can join through that. Have a good day, guys. Peace.